There's one trading rule that completely transformed my whole approach to the market. It's simple, it works every single week, and it's allowed me to have consistent profits while most traders are stuck taking loss after loss. What I'm about to show you is so straightforward that any beginner can master it. But here's what's crazy. Most people take 10, 15, even 20 trades per day, but I'm doing better only taking one high quality setup every single day. I'm gonna break down this entire approach so that you can start using it immediately. Then I'll walk you through real examples so you can see how it plays out in real market conditions. So let's not waste any time, let's jump straight into it. Quick disclaimer, this is not financial advice. Trading success is not guaranteed. There is a lot of risk involved in trading and there are a lot of unprofitable traders. This is strictly for educational purposes. The other day I made $6,300 with 1 day trading this strategy, as you can see. While most people see that I made $6,300, what you don't see is that I patiently waited 1 hour before taking any setup. I watched the market, I didn't force any trades, and then when I found the opportunity, I went and I took it and I crushed it. While others take 5, 6, 7 trades a day and they lose all their buying power before even an hour of the market, I only took one. I made $6,300 and I stopped. Now you may be asking, PB, how can I do the same? In today's video, my goal is to help you make consistent profits trading with one boring but high quality setup every single day. I'm gonna teach you the 3-step strategy that is simple, mechanical, and repeatable. It doesn't require scalping, indicators, or taking 10 plus trades. I wanna go over a couple things before I go over the strategy. More people think the more trades you take, the more money you'll make, which is a complete myth. Less is more, and I'm a big believer in that. You wanna focus on high quality setups and how high quality setups can genuinely change your life. You know that after you take one losing trade, there's a way higher chance you're gonna take another losing trade? So when you take a losing trade, stop. And when you take a winning trade, stop as well. Be happy with your green. And as long as your winnings are bigger than your losses with a proper risk reward, then you'll be set. But one trade a day can change the whole trajectory of the rest of your life. And you may be asking, PB, how do I find the setup? How do I know when it sets up? The strategy sets up every single day. It's just about finding the opportunities, which is what I'm about to show you. Every single day, I do the same exact thing. I'm gonna show you downside examples since that's how I made the $6,000. So what I do is I mark the pre-market low and then I mark the pre-market high. So do you see this blue line, how it's the pre-market low, which the pre-market is data from 4 a.m. to 9:30 a.m. and the pre-market high. And then what I look for is a 5-minute close either under the pre-market low or above the pre-market high. In this scenario, this stock was weak pre-market, as you can see. So this was a weak stock. It was weaker than the market. So what did I look for? I saw a 5-minute close under pre-market low. And remember, pre-market low and pre-market high, the whole point of these levels is to help you indicate when there's trend. I never trade and chop, so when stock's between the pre-market high and pre-market low, I don't trade it. When the stock isn't between the pre-market high and pre-market low, if it's under the pre-market low, that means the trend is down. If it's above the pre-market high, that means the trend is up. These levels are institutional boundaries, and I don't trade in those boundaries. I wait for it to get above it or under it because I don't want to get stuck in this chop. I don't care about the chop. I want trend. Like, look at this chop. No, I don't care about this. I don't care about this. What I care about is this because this is repeatable and it works. After you mark your pre-market low and your pre-market high, what you do next is you wait for a 5-minute close under the pre-market low. So you see how our pre-market low is 165.87. So we're gonna go to click on this candle. You see how it says close 165.58. It means to close under it. So you see how the white portion, the box, is under the level. That means we got a 5-minute close under the pre-market low. Once we get this 5-minute close under the pre-market low, we then look for a retest. So what happens right here, I get a retest of the pre-market low. Now you may be saying, PB, what is a retest? Let me show you. So say this is our pre-market low. We wait for it to get under it. Now that means our trend is down. That means there's a downside move coming. And then when it comes back up and taps it, this is your area for puts. This is called a retest. When this previous support, this previous pre-market low, then becomes resistance. So this is where we're gonna enter for puts, and what we're looking for is a move like this. And what happens? Exactly that. So as you can see, you enter puts right here off the pre-market low retest, right there to be exact on the tap, and then we dump. We create new low a day, we keep dumping, and you take trims as it dumps, and then you add the VWAP and the ADMA to your charts. Here are my settings. ADMA, VWAP. As the stock is going down, you guys see this blue line, this blue purple line kinda? This is called the EMA. This is how you know when to sell and when to hold your runners. So look, as it's going down and creating new low of day, you want to take trims, but you always want to hold your runners against this EMA. So the second it gets above the EMA is when you're going to sell the rest of your position. So right here, you would sell the rest of your position. If this trade would have not worked, your stop loss would have been a 5-minute close above the pre-market low. So for example, if this happened right here, like this, we would have gotten out of the position and exited. So we would have risked a very little bit to make a lot, because practically we're buying at our stop loss level. We are literally buying at our stop loss level. We're risking very little to try and make a lot. So say that's our stop loss, since if it gets above the pre-market low, and then we ended up getting out right here. That's a 1 to 6 risk to reward, 1 to 5.8. Actually, it's right there. A little lower. Where's the EMA? Yeah. So 1 to 6 risk to reward. That means you would have risked $100 to make $600, $1,000 to make $6,000. And that is why I love my strategy. So again, we had a 5-minute close under pre-market low. We then waited for the retest of pre-market low, and we trimmed as it dumped. So here's another example. Mark your pre-market low, mark your pre-market high. As we can see, we're down pre-market. So what we're looking for is a 5-minute close under pre-market low for puts. So that's our pre-market low, right? What happens right here? We get a 5-minute close under pre-market low. You guys know what we look for when we get a 5-minute close under pre-market low. We look for a retest. So then what happens? Get a 5-minute close on our pre-market low. What we're looking for is something like this, which is exactly what happens. Next candle, we get the retest. This right here is our entry for puts. Our stop loss would be a 5-minute close above here, which it never gets, and then it dumps. On this next candle, we're trimming, we're selling portions of our positions. And then when it gets above the blue line is when we're getting fully out, right there. So on this position, you would have risked about 1 to 7 at least. So you would have risked $100 to make about $700. You would have been more than that. The 0 DTE contracts would go crazy. Or $500 to make $3,500. That's my strategy. It's repeatable. We trade the trend and it works. But look guys, I don't trade the chop. So if it's in between these levels, I don't trade them. I wait for it to get under the level. I wait for the retest. Once I get the retest, I attack and I smash it. Let me go over one more example with you guys really quickly. So we have this yellow line on our charts for a reason, the VWAP. The VWAP, if it's under the pre-market low, so you see how I just marked the pre-market low right here. When the VWAP is under the pre-market low, what you want to look for is a VWAP retest, not a pre-market low retest. You see how here we're under pre-market low, but VWAP is under pre-market low as well. That means you want to trade a VWAP retest. So what do we get? We got a 5-minute close under pre-market low. We then came up, kind of tapped pre-market low, and got a VWAP retest. I entered puts here. I sold most of my position here for over 50%. And then the next candle, I got stopped in the rest in profits. Beautiful little trade. Not every trade's gonna be a risk $100 to make $700. But on this trade, it's probably, let's see. What's the close would have been probably like around right there, I'm guessing. And then profits right there. We're at the top of the candle. This trade was about a 1 to 3 risk reward, and obviously it caught it really nice on this trim. Then it went way lower after, as you could see, ended up going to freaking 1 to 12 easily. But again, I don't care about that. I follow the system, I follow the strategy, I got stopped in the runners, and I'm okay with that. I don't care about what happens today. I care about what's gonna happen every single day for the next 5, 10 years. I'm trading in this market not for today. My habits and the decisions I make, I don't care about what the outcome is today. I care about what the outcome will be every single day for the next 5 years, 10 years, because I wanna stay in this market. I wanna live to see another day. And that is why I'll always stay disciplined to my rules. I'll always stay patient. I'll always wait for my setup, and I won't gamble with this stuff. Because that's what's gonna decide if you're a profitable trader or not. Whether you have that discipline to follow your rules, especially when you don't want to, especially when you just want to gamble and take a lot of trades and take the trade early. And that's okay if you miss it, it doesn't matter. So guys, quick recap. If the market's down, you mark the pre-market low, pre-market high, wait for a 5-minute close under pre-market low, enter on the retest, and if VWAP is under pre-market low on the VWAP retest, sell a new low a day, and as it rides the EMA. For the upside, you mark your pre-market high, wait for a 5-minute close above. On the retest, you enter, sell a high a day, and ride the EMA. We only went over downside plays in this video. I have other videos going over upside plays. If you want to go watch them, they're on my channel. And that is it. My strategy is short, simple, but it works. And that's why I think I resonate with so many people, is because I simplify the market. And I believe that if I could do it at 18 years old, and if I simplified it, then you could too, no matter what age you're at. Just remember, quality over quantity is key. Patience over excitement will absolutely be killer for you. And treat trading like a business. Stop treating trading like a video game, because it's not. You see me, I'm 18 years old. I've made millions of dollars. I treat this stuff as a business, not a game. This stuff can really change your life. Trading can change your life, but you need to give it your all. You need to treat it like a business. You need to stay disciplined, stay patient, and no matter how bad you want to take that trade, no matter how bad you want a revenge trade, no matter how bad you want a full pour, you need to stay true to yourself, because you deserve it, and you owe it to your family, and you owe it to yourself to become a profitable trader. So you better do everything that you possibly can to do it. Love you guys. Subscribe. Weekly videos every Sunday, 3 p.m. Eastern. Peace.